Okay, since I still get questions about triggers, I'm going to go through another example, and this is one of the actual setups that we had in the trading room today, and it was in the S&P futures, and it was based on a 120-minute chart. Okay, I do follow multiple time frames in the S&P. I follow a weekly chart, a daily chart, a 120-minute chart, a 30-minute chart, and then sometimes even some shorter time frame charts. But I do like the 120 a lot because it does show some of the larger swings, and that kind of sets us up for some decent trades here. The overall pattern on this 120-minute chart is, still higher highs and higher lows. So I was still setting up the buy side for you, and I was taking, for example, these prior declines within the uptrend and then projecting them from any new high. Now we've fallen just a little bit short of those red projections, but you can see that these swings are somewhat similar. At least, this one was 16 3/4 points, this one was 18, this one was 17, this one's 15.5. So just a little bit less than some of these swings here. But there were other price relationships that also identified this area as important. Now, one of them was a 618 retracement of one of the larger swings, and then we also had extensions of, let's see, I believe it was this low to this high, and then this low to this high. Bottom line, we had good solid support for a decision at the 23.76 75 to 23.78.75 area. Okay, so that was the setup. Now, if you remember, the way that you make money with this work is setup plus trigger equals trade entry, and then you manage it. Before I go into that though, I also wanted to show you that I did have timing factors at the same time that we were testing support. So that increased the odds for, this trade potentially working out, because when you see a cluster of timing cycles that come together, you also look for a reversal of whatever the market's doing into it. Since we were trading down into the timing, we were going to look for a reversal back up. Anyway, depends on, if you're a day trader, scalper, whatever, as far as what time frame trigger you're going to use. But if you're going to day trade, typically the smallest chart that you're going to look at is something like a 233 tick chart. Okay, so some use 233, some use 377, some use 1 minute or 2 minute chart. You have to test them for yourself and see what works. But bottom line is, this is where we tested the support, and you basically wanted to see an indication of a reversal. And by that, I want to see a 834 EMA crossover, which we saw here. And then I also want to see it take out a prior swing high for a buy. Okay, so basically the pattern going into this low was lower lows and lower highs, and then it shifted to higher highs and higher lows. So that was both a pattern shift and the moving average crossover. Bottom line, once both of those things occurred, you could look at the buy side and then have your stop either underneath here or underneath the low end of the cluster. Now, one of the other things that you can do is sometimes you'll miss the initial trigger, because when both of these things occur, okay, so when we took that out and you also had the cross, let's say you missed it because it went too fast, your other option is to buy the next pullback, and then you can have your stop again underneath the recent low. Anyway, that's just some ideas as far as triggers that you can use with at least the futures markets. And yeah, that's about it. I did have a little bit more. If we continue, okay, because we did have a nice rally so far. I forgot I wanted to share that if we do push through the 618 retracement and the 100% projection of this prior rally swing, then we are more likely to continue to rally towards the upside target of 23.99.